The first quarter of FY21 for Lumax Industries was a washout quarter, and that was due to the effect of the lockdown that was enforced during the major part of the quarter. However, looking ahead, the road looks bright. In our ideas for profit today, we will focus on the Q1 earnings fine print to really find out if investors should keep an eye on this one going ahead from here. Well, this end-to-end lighting solutions provider for automobiles has posted a weak set of numbers in Q1 FY21. The revenues have actually suffered a significant decline on a year-on-year basis. Now, let's talk about the more details. In Q1, Lumax net revenue from operations dropped 80.6% on a year-on-year basis, as major original equipment manufacturers had no production due to the lockdown. Also, the operating profitability, that is the EBITDA, turned negative due to significant negative operating leverage this time. Now, Lumax generates more than 90% of its revenues from passenger cars or passenger vehicles as well as two-wheelers segment. Now, hence the fortune is actually linked to the demand recovery in both these particular segments, that's PVs and 2Ws. Now, though the COVID-19 pandemic had triggered a massive disruption in demand earlier, there has also been a V-shaped recovery in demand for both the two-wheelers as well as passenger vehicles after the lockdown relaxations, and this has been led by people preferring to go by a personal transport, as they still fear taking any public transport due to the fear of contagion or the risks involved. So this is quite evident from the July 2020 monthly volumes of the OEMs. For instance, Hero reported a mega YOY decline of say 4% and in the monthly volumes. Maruti, which has a 44% revenue share, witnessed a year-on-year growth of 3%. So this demand recovery is expected to augur well for Lumax in the months ahead or the quarters ahead. Now, an important trigger for the company is the wider adoption of the light emitting diode or LED lights, as they're called, as high value and high margin products, and they constitute around 30% of Lumax sales in the quarter gone by as well. Now, the management has already indicated that there is a huge potential in this area, as the penetration of LEDs in India is still very low, about say 15 to 20%, and moreover, the newly implemented Bharat Stage 6 rules require vehicles to be more energy efficient, which is expected to lead to a faster adoption of the LEDs as well. Now, they also expect huge growth from this transition as content per vehicle also goes up. Now, the management has also indicated that the new launches are coming with LED lights only, which is expected to increase the LED's share in revenue going forward. Now, Lumax management has maintained its guidance of taking the LED-based lights share in the revenue to 50% going on from here. Now, even before the pandemic, Lumax was actually rationalizing the cost through localization and also the backward integration. So that is working positively for the company. Its efforts have started yielding results before the COVID-19 had struck, and it may go on when the recovery starts. Now, the management has also indicated that they can take the margin back to double-digit levels in the quarters to come. Now, Lumax is currently trading at say valuations of 15.3 times FY22 estimated earnings, which is quite reasonable. So therefore, investors could actually look at buying this business with a long-term perspective.